I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today we are talking about FHA loans. What are FHA loans?
Holy cow, FHA. I've heard about them. Don't they do like special housing projects and stuff?
Yeah.
Is that HUD? Who is FHA?
You know, I remember when I first heard FHA. I mean, it's very confusing and it's kind of intimidating when you hear FHA. Like, whoa, something I should probably know something about, but how am I going to, dig up all the details? And again, there's so much information online right now. People have maybe they talk to a lender, maybe they're searching online, they're getting information. A lot of it's not accurate. But for whatever be the case, we are going to just try to go through that right now and answer the most common questions and just the highlights of the FHA loan.
Right. Yeah, that sounds good. Because the FHA product, it really is a phenomenal product. We get, the occasional borrower or referral that calls us having a question about it, a little bit concerned. But really, FHA is just it's a phenomenal product for for a slightly more specific group of people.
The reason why it's geared, it's a better product. It's more suitable for a borrower with lower credit scores and lower income. Now, the reason why I say that is because usually the products that we're comparing it against is a conventional loan. Okay, a conventional FHA. Now, we have another podcast on that. But this, again, the pricing is so much better on FHA when you have really mid, you can be high 600 scores, but definitely mid 600s. I mean, and by low 600s, FHA, I mean, it's a clear winner. But it's a clear winner really all in the 600s. If your score's in the 600s, my point is FHA is probably the product for you.
Right. And people are wondering, okay, so why am I being steered into FHA? Is FHA a program where the bank makes more money? Is it a program that's going to be higher fees? I just want a loan. Well, I think the way that people, need to view this is FHA was created for a borrower, like you said, that is slightly credit challenged. And potentially doesn't have the down payment that you would otherwise have.
Yeah.
And there's slightly higher debt to income ratios for FHA, and the pricing is actually way better than conventional when you factor in all those pieces. So It's not that our FHA borrowers can't do conventional. Some of them can't, but some of our FHA borrowers could, but they don't want to because...
Yeah, well, and I'm going to say that it usually goes hand in hand. It's usually if you have a large down payment, if you have 30% down and you have a low credit score, well, that down payment can actually put you in a position where you can get a conventional loan. It's usually the low credit score and the low down payment. But because the pricing adjustments are basically based on your loan, but based on your down payment. So you come to us and you have a 650 credit score and you have a massive down payment. That changes a lot.
Yep, exactly. And again, the biggest thing is going to be credit score probably. If anyone takes away, or if you take anything away from this podcast, it would be FHA best serves those with the lower credit scores. Why? Because it gives you phenomenal pricing. Why would it give you phenomenal pricing? Because FHA is actually insuring these. So there's money that is in place to help keep these loans as low cost as possible for you. So without FHA, it's an expensive world out there. So FHA is really, really a good product.
Yes, that's right. Okay, so that's a great point. When you get a loan with FHA, HUD has insured the banks that if you go in default, if you have to go into foreclosure and there's losses on that mortgage, they will make whole the bank.
Right, okay, HUD will. How about that for a guarantee?
All FHA borrowers are basically paying the premiums for this insurance. So it's a huge bucket. I mean, all these borrowers are paying mortgage insurance. And maybe we could jump right into that. I mean, one thing that's really unique about FHA is that you have upfront mortgage insurance. You're paying a fee upfront where they actually roll it into your loan, and then a monthly mortgage insurance. Okay, so it's two types of mortgage insurance. One's upfront and one's monthly, but this pays that insurance policy.
Right. And though that sounds expensive, it's really not. It's that upfront mortgage insurance that allows your interest rate to sometimes be 0.5% lower than what it otherwise would be. So the upfront mortgage insurance is insurance I guess I tell borrowers to allow that interest rate to be even lower than what it should be. Okay. And then you have the mortgage insurance on a monthly basis, which is still lower than what it would be on a conventional conforming loan. So,
Right.
don't think of the insurance as bad. Think of the insurance as good, because if it wasn't there, it would be a lot more expensive.
Yeah, I like that. It's a good point. I mean, because FHA loans, I mean, if you get an FHA loan, you're almost always going to have a lower interest rate than a conventional loan.
Right.
People were like, well, why wouldn't you just always do FHA? I mean, but the problem is that you have, again, you want to talk to your loan officer about the pricing, but basically what will happen is that insurance gives you a lower rate, but you do have mortgage insurance. And let's talk about let me just make sure everyone is probably going to ask, because they're now wondering, well, what's the real advantage, disadvantages is FHA mortgage insurance. It doesn't go away. Okay, the monthly mortgage insurance doesn't go away. You can't shake it off like you can on a conventional loan.
Mm-hmm.
On a conventional loan, if you put less than 20% down, you have private mortgage insurance, but you can get rid of it.
Mm-hmm.
FHA is on for the life. Now, actually, I'm going to clarify. It's on for life if you put less than 10% down, which most people are going to be in that situation. It's on for life if you put less than 10%. If you put more than 10% down, you do have to have it on there for 11 years.
Yep, good qualification on that point. That's the one thing that we do talk about. That's the one thing that our borrowers ask us. Out of all the advantages that FHA has, really the only real disadvantage is that they have that required monthly mortgage insurance. But when you compare that required monthly mortgage insurance to what it's giving you, it pales in comparison. So again, the big takeaway is this is a phenomenal program. To get a little bit cerebral in there, to get a little bit strategic in there, I would also plant this seed that an FHA loan is going to get you into a home, is going to get you started to start building wealth. But at some point, when that credit score increases and when your scenario increases, has a little bit less risk, you're going to want to get into a conforming loan eventually. But that's okay. You wouldn't not get into an FHA loan just because, I have to refinance in 4 or 5 years into a conventional. No, just think of it as kind of a stepping stone. FHA is going to get you, that much closer. Well, get you into a home, big deal. And at some point, if rates stay low and your credit's up, you can always refinance into a conventional loan. So do not be afraid of FHA.
Yes. And FHA also has a streamlined refinance option. So which does not require an appraisal, does not require income documentation. That's a nice feature.
Yeah, that's an awesome feature. That's phenomenal.
So if times are hard and you've been making your mortgage payment on an FHA loan for years and rates are lower, FHA will let you do a refi.
Mm-hmm.
They'll let you refi into that lower rate. So that's a nice feature. Yeah. FHA loan product is available in a single family homes, a duplex, a triplex, and a fourplex. Now, every year those loan amount limits change. So you're going to want to ask your loan officer what those loan amounts are, and each county is going to have different limits.
The one real advantage that I don't think conventional can actually touch, I don't care who you are or where you are, is an FHA multi-unit loan.
Right.
You can get in as a primary occupant and yet lease out the other. You have a phenomenal interest rate and you have that ridiculously low down payment of 3.5%. Conventional can't touch it. So I would say, I don't care who you are, the FHA product for the multi-unit is superior, hands down, no questions asked.
Yeah, that's a really good point. And they give you the high loan amount for that fourplex.
Yeah.
Very cool.
Yeah, it's awesome. So we love to talk to you more about that. That's a little bit of a digression, but...
Yeah. And FHA loans allow you to purchase a home and do cash out. So you can do a cash out refinance too. So those options are both on the table for borrowers looking for an FHA loan. So again, if there's so many little guidelines that make it different or maybe appealing, and again, a good loan officer is going to be able to go through those options with you. Tom and I do that every day. So if you have any questions or need anything, let us know.
Perfect.
And if you like what we're doing here, be sure to subscribe to the channel, like the video, and click the notification button. All right. Take care, everyone.
All right. Awesome. Thank you, folks.
Hey, guys. Thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.